Good morning, traders. I hope you're all doing well. This is Dinner Trading here. I just want to quickly check in with you guys. I believe today is a really beautiful day and might be one of the uh, great days in the bear market. As far as this bear market begins, if you take a look in front of me here, actually, I have unfortunately this morning I have a 5 minute chart because much as the bear trend is developing, I still have to be cautious to trade longer time frames. So I have this 5 minute chart in front of me, which is completely bearish, and so if you haven't noticed or if you haven't watched any of my videos, let me actually bring this close enough to you. If you haven't watched any of my videos, I do use what we call the opening range breakout, of which in my strategy of trading with opening range breakout, I wait for the price to get out of this blue zone, this blue uh, session here. So we have the first candle opening in the morning, the closing of that price, I mean of that candle, and the opening of that candle. Mark that zone. Anything within that, it's a no-go zone. Anything outside that is where we begin with the game. Okay. So we broke outside of that pretty quick, but also of course as you can see, the day opened with a really high consolidation. So there was quite a bit of consolidation right here, which if you can see the wicks in those candles, it's both ways. Most of them, the wicks were both ways, except the first candle opened with really strongly. But every other candle that opened, and again I'm using Ikenashi, every other candle that I open, if I can find what I can use for for drawing something here really quickly, uh bear with me here. I don't use a lot of drawing tools, so I cannot tell exactly which one it is um that I need. But what I'm really trying to say here is that if you look at the candles here, you will see that every single one of those candles, the one which is trending down, opens in the middle of the previous one, and that pattern continues. Okay, um, and because of that, we have this descending staircase, which we are riding down with. Okay, and this only happens on Ikenashi. Um, well, I cannot find a drawing tool, boys and girls, ladies and gentlemen. I think yeah, I cannot find a promising drawing tool here, which I know I've used it a few times. Um, hmm. Okay, I will surely go ahead and do my research. So I know you're asking, why can't you go do your research and come back? Yeah, I will do my research. Just give me a moment here. So let's forget about that. But I'm gonna go ahead and just mark labels and use those labels as examples. So if you take a look here, you will see that um, if you take a look here, you'll see that we have this candle open in the middle of the previous candle. Okay, technically, as if you're trading, if you're trading opening range breakout, and if you're trading Heikenhashi like this, if you see this pattern start to form, this candle open in the middle of the previous candle, and the previous candle open in the middle of the previous candle, you know that your trend has begun. As soon as you break out of the open range breakout right here, buy right here, like straight away buy, put your stop loss above, I mean, a few distance from the daily higher high, which would in this case would be one ATR from the higher high. By ATR, I'm referring to this indicator here. If I can, only if I can show what my that is, the ATR. The ATR value here is 1.52. Okay, if you can see, it's 1.52. You can take a look at it from the right hand side of my screen, or you can just read the value from in front of the ATR. But so that would be this value 551. um, minus, I mean plus 551 plus 1.52. That would put us about let's say 55. Let's say 553. 553 would be a little up right about right here. That's pretty high for a stop loss, but that's the safest you can play. And then as soon as you get into profit, move your stop loss into break even, and then just right around that. So buy buy right here. As soon as you buy right here, um, stay with this trend and trade the trend. Do not trade against the trend. I normally tell people. I normally tell you all every now and then, trade with the trend. Okay. um, Now that you might be asking, it's very easy for you to tell us where to enter in a trade. Where do we exit the trade though? So as if you are using Heikinashi, which of course you should be able to tell as well on a regular candle, because this right here is a regular candle. On a regular candle, if as you can see, all these candles are completely bearish. But on a Heikinashi, um, you are looking for a candle that will not build the stairs for you. If you see one of those candles that is not going to build the stairs for you, just don't even hesitate. If you have something already saved, yeah, exit the trade. But here we're still building the stairs. If you look at side by side, um, if I put this side by side, you might actually, let me not change that because that will stop my recording, I think. Yeah, so as long as you're building staircase going down, you should stay in the trade a little bit and just keep adjusting your stop loss to every other stairs every now and then when a stairs, when a new stairs is being built. Let me use an example of when you should exit the trade. Let's take a look at the previous day, yesterday. Okay, we had a similar pattern yesterday, which is right here, except the day opened a little bit strong, but not really strong still, because we still had this consolidation. If you look at this, a good move should not contain wicks. The candle should not contain wicks. Okay, if you take a look here, there is this that those candles have a lot of wicks, and then you will see that the next outside here is the only one without wick. That, well, not really, but it's a strong one that opened in the middle and did not have a lot of wick. And that was the beginning of the clear trend on an uptrend, which of course it was short lived. And right after that, the reason this is short lived, actually, this should be the higher high of the previous day, or the intraday high of the previous day at least, or some level of resistance on the previous day. Okay, and you see that right here. You see that right here. So because of this, the we didn't have a lot of rally beyond that, which is right here. Because of that, we didn't have a lot of rally. And so to get back to the pattern of the exit, or the exit pattern, we start riding and building our stairs going down, you know and look here, you can exit at any point of time. This was the first candle right here. If you take a look at it, let me zoom that out for you. This was the first candle. Okay, this is still building the stairs, but look, it doesn't have a lot of, if you're building, you need foundation. But if you're building without a foundation, that's yeah, your building is more likely going to cause a lot of problem for other people. um, Professional builders would say, "You're building garbage, bro. You need to hire us," something like that. But here, this is not building a stairs now. This is starting to cause disasters, and this became serious a little bit. So that means anywhere in within these candles, I would have to exit my position. But remember, we are trailing with the stairs. Our stop loss is still sitting there, right there. Okay, our stop loss is sitting right there, and because of that, um, any of this does not impact us. Okay, any of that does not impact us. And remember, if we were to write that, we already know the previous daily high was there, meaning this should be a clear downtrend, um, writing down. And we saw the, we saw the sign or the signal right over there. We saw that signal. Once we saw that signal, we kind of just had to hop in. As soon as we hopped in over there, that would have been um, what? How many candles? 10 candles? Five? No, more than five. One, two, three, four, five, six, seven, eight, nine, 10 candles here. Yeah, that would have been 10 candles. I'm adding this last before this big cycle that I've drawn here. So as soon as you see this fake build up start to form, yeah, just quit. Call it quit, call it good, whichever way you want to call it. And then give it time to accumulate, give it time to accumulate things around. So you have this beginning um, from this in within this level here. This is just kind of consolidating. And how do you know actually if it's just going to consolidate or not? You can take a look. You can take a look, go to the far left and see if there is anything at all at the far left. And what might that thing be at the far left? Okay. um, for our case, actually, you need to visualize that on a, let me put it on a larger time frame, so that we can tell what's going on here. So on a longer time frame, we would see that where we drew that line, first of all, which was the intraday high of yesterday, that intraday high was corresponding to a pretty one of the most strong key levels, actually. Well, a support level. Okay, that support level from August 15th became a resistance level in the intraday. But also remember, this is a resistance level right now. No, this was a resistance level as well. Um, August 14th. This might be our support level right now, which let me paint it green, just to signal that this is going to be our support level for today, maybe. But we are already far beyond that. Actually, if you can see this red line here, this dotted red line, that this dotted red line just tells us that we already broke that, meaning there's really nothing here to stop us. Yeah, there's not much at all. There's nothing there to stop us. So the trend is boiling. The trend is boiling. um, unless if we're talking about this level here, but we already also passed the resistance level. We broke that resistance level. We are going to try to probably aim for, we're going to try to aim for this support level from the previous. And this support level, let me paint it red, that's going to be our current resistance level in this chart that we're looking at. So meaning that since we already broke that resistance level really quick, our next stop is going to be 538. Okay, so we go through 538. We should be able to see some solid moves. I mean, maybe some level of resistance there, which again, I told you guys yesterday. I told you yesterday that it is very, very. I mean, the trend is very, very aggressive. It breaks through the resistance level really easily when we are trading downtrend. If you're trading uptrend, the reverse is true. So if you're trading downtrend, every support level um, needs to, every support level becomes very weak. Resistance level becomes very strong. Even intraday resistance level, those gets gets respected. But anyhow, let's get back to the shorter time frame. On a shorter time frame, you might start seeing that we are actually starting to form some level of um, you know with some pullback is starting to form up which of course, um, the pullbacks, I mean, the pullbacks here might just be for a short time before we rally down for this level here, which of course pay attention to those both, regardless of how you're trading, either options or whichever security you're trading. On my point of view, I think that if we actually, let's take a look if we had a clear signal for exiting this trade here, on a we do not have no, we're still in a trade. That pullback is just to fool us around, I think, actually. um, we're still in a trade. Probably the next candle will boot us out, of which, before that next candle boot us out, we would want to see that that next candle is actually um, on the same level. That means same level, meaning it opens the bottom, I mean, the opening is the same as the closing. I mean, the closing of both of those two candles should be the same, should lie on the same line at least. Once we see that, we know for sure that's the beginning of the exit signal. And we know that the next thing that should follow should be the wick that should form up on both sides of that candle. And we don't see that characteristics here. Um, at this kind of yeah at this point of time, some people would be like, I think we're still gonna be trading downtrend. Can I get in? What time should I get in? No, do not get in at this point. It's too late. It's like you're trying to get in your car, or you're trying to ride the train when the train is in motion. You're trying to get in the train when the train is in motion. You're gonna get crushed. You don't want to get involved in that kind of drama. So with that in mind, um, yeah, the exit and entrance signal is quite pretty clear. It's really clear when it comes to to trading securities. I mean, not just security. It when it comes to trading with this kind of simple strategies. Very simple strategy, highly accurate. You don't need to chase the market. Let the market come to you. You do not need to chase the market. It's just simple, unless if you're doubting yourself normally every time and every now and then you be like, I think we moved down too much, I think we're going to pull back up in a second here. And then you trade your emotion, your emotion of you thinking or it's gonna pull back up. That's you're thinking of gonna pulling back. You're thinking of pulling back up. That is you trying to trade a call, trading against the trend, which is absolutely not recommended on my point of view. So I would say you have something that helps you identify things. Use your stop loss and leverage that to your best. It doesn't matter if it breaks to one direction. At least if you're using a stop loss, you will get a few dollars out of that before your stop loss is hit. For example, um, if you traded yesterday, actually, a good day, you will also know a day that opens with a lot of wicks like this, it's not a good day. You will know for sure it will clear at some point, but it's not going to go in that same direction. Like it's a green here, opens, it shouldn't continue in a green direction. I will give you a clean example. A clean example of a good day. Um, this was kind of a so-so day as well. This was a good day, but not so good. I will show you a perfect example. Yeah, and again here the candles open with very few wicks, but of course there were a lot of wicks in the middle. Like I said, one ATR below, that would be our stop loss. Because remember, if we had placed our stop loss right here, look at this big giant candle, it would have come and hit our stop loss right away, like boom, right away. So one distance away from that keeps us from keeps keeps us in the trade, okay, and we would still be in this trade for a little bit of time. But a clear example of a good day is this. This is a clear example. The first candle, no wick. Second candle, forms in the middle, no wick. Third candle, actually, second candle breaks through, no wick. Third candle breaks through, no wick. Everything else, no wick. My first exit would have been right here. If you listen carefully, what I mentioned earlier, this would have been my first exit. Um, but if I'm trailing with this red, if I'm trailing with this red wave up here, Um,